All I have in this world is my balls and my word, and I don't break them for no one. Do you understand?
There was an English philosopher, William of Ockham, that lived in the 1300s. He postulated that when you have multiple hypotheses to explain an extraordinary phenomenon, oftentimes the simplest answer is the correct answer. This became popularized as Occam's razor. And what is the extraordinary phenomenon we want to explain in today's video? The markets. How much higher can they rally? Where are they going to? Will they retrace? Just the markets in general. What explains the third strongest turnaround rally in stock market history? We're going to get into that in this video. Welcome to Market Makers, everybody. Your home for tomorrow's TA today. This is the place to be if you want to understand the economy, if you want to understand the stock markets from somebody that has studied both. So let's go ahead and start this off. There's a couple of key concepts I want to talk about in today's market video. Everything timestamped below as per usual. The crypto video will be out right after this. Everything I talk about in this video can be traded on SimpleFX. If you live outside the US, it's a CFD exchange, fantastic exchange. Use our link, support the channel. You want to join our Discord or join our YouTube members only, click the join button there. Get all of our TA and vids we put out throughout the week, my staff and I. Let's start off. Where are we at? We're going to look at some leading indicators for the markets. One thing I want to show you guys is inflation. Now, I find it quite comical that a lot of these guys on YouTube are using Truflation during the run-up of inflation, meaning when the Fed was telling you CPI was 9%, Peter Schiff, guys like that were out there, no, inflation's really 20, 30%. Heck, they would even show you the inflation numbers on Truflation to prove it. And sure enough, if you look at aggregated inflation on Truflation, I 100% agree. This is what you're paying over here, guys, 28.49%. Look at your food costs, look at your housing costs, look at what your cars were costing, clothing, everything. That's aggregate compounded inflation. However, the year-on-year inflation is 2%. This is the number that Peter Schiff and those guys on YouTube, on Wall Street, don't want to talk about. I use Truflation on the run up. I use Truflation on the deflation down to 2%. As a matter of fact, you hear a lot of people on Bloomberg. I listen to it every morning, as everybody knows, a couple hours every morning. They come on and they say, well, look, the European bank, the European central bank, they can keep cutting because their inflation is lower than ours. It's like 2%. Well, you know what the ECB doesn't take into account? Housing. If you X housing out of our inflation is also 2%. Not only that, housing is not truly in the CPI because the CPI uses owner's equivalent rent, a bullshit metric that they made up, a formula to somehow encompass what housing inflation is, and it's not accurate. The CPI itself is not accurate. Real inflation was over 20% when we were at 9%. Real inflation right now is 2%. Aggregate inflation is closer to 20, 25%. And the aggregate inflation, that number is not coming down until you have a deflationary event, such as a recession. Back in the GFC, inflation was higher than it was now. At its peak, it was over 5%. It went negative. It went minus 2%. Deflation. Then Ben Bernanke invented the 2% inflation target back in 2012. Yet when you watch TV, they all talk about it like it's a holy grail number that's been around for 200 years. He copied the New Zealand Central Bank, which had a 2% target as a ceiling, but he used it to justify all the money printing. Well, actually, guys, what we want is a 2% inflation target. That number's made up. It's bullshit. You know what the correct inflation number should be? 0. Things should not cost more than 2% or 2% more every single year. Guess what? That means if you don't get a raise in 5 years, you actually took a 10% pay cut. That's what you did after 5 years. You got a 10% pay cut. If you have a business makes $100K a year, you're actually making 10% less after 5 years. Nobody wants to hear that. But you could say, Brendan, but listen, I listen to MSNBC and CNBC, and they come on and they say tariffs. Tariffs are going to lead this massive inflationary spike. And guys, you hear me talk about market history all the time, economic history. You have to understand the political bias in this space is massive. 92% of all Wall Street donations went to the party on the left, the Communist Party, the Democrat Party, to Kamala Harris. That's where 92% of the donations went. They didn't go to Trump, okay? So you have Trump derangement syndrome on the front end. But on top of that, just think about what you're saying. So tariffs, let's just go explain this really briefly because people still ask questions about it. I see on X. And economists, these guys come out like David Rosenberg, all these economists, and David was at Merrill Lynch when I was there. They come out and they say things like, oh, the tariffs are horrible. They're going to crash the economy. Did that happen? No. Tariffs are inflationary, though. Now it's just a matter of time. Sure, you didn't see it in the first 3 months. Sure, you didn't see it in the first 6 months. But given it's just a matter of time. Guys, go back to 1922. 1922, the effective tariff rate on in industrial and agricultural products was 40%, the Fordney-McCumber tariffs, 1922. The effective tariff rate right now is 13.2%. It was 40% in 1922. Do you know what the stock market did with a 40% tariff? It went up 500% in 7 years, the 7-year cycle. Do you know what happened after that? You had 1929, but it's not what you're told listening to Wall Street, listening to these guys on YouTube that have never read an economics book or never researched market history. The reason the market crashed was a European economy crashed. They had their currency crash. They defaulted on their debt. Germany went into hyperinflation. The UK went into moratorium. Canada defaulted on their debt. This caused a massive bank run. When the banks got run on and their currencies collapsed, US banks started collapsing. Thousands of U.S. banks collapsed between 1929 and 1932. Actually, 5,000 banks collapsed. So when you hear people talk about the Smoot-Hawley tariffs, that caused the Great Depression, they're absolute morons. That bill got passed in 1930, June of 1930. None of those tariffs even came into effect until 1932. 5,000 banks collapsed. The stock market was already down 50% when the bill even passed in 1930. The Great Depression already started. Germany went into hyperinflation, giving rise to Adolf Hitler and the Nazis in the 1930s. And then you got World War II out of it. So the tariffs are not the problem. You had a booming economy, commonly called the Roaring 20s, with massive tariffs. Tariffs 3 times the size of what we have now. They're not inflationary. If tariffs were inflationary, then answer me this. How come in California, if you raise sales tax, which is everything domestic, anything you buy on a sales tax, why is that not inflationary? A tariff is a sales tax on foreign goods that you as the consumer have the choice to buy or not. Not only that, the importer has the choice to pass them on to you or not, and so does the producer. The Wall Street narrative is, oh, tariffs are 10%, therefore everything costs 10% more. Not true at all. We already saw it in Japan. We saw it with the German car companies. They ate the tariffs. They're not passing them through. They can be paid one of 3 ways. The producer, BMW, Mercedes can pay it with their suppliers, or they can pass it to the importer, they can pass it to the consumer, or it could be divvied up. But you don't see that. It's all black and white. When you watch YouTube, when you listen to the media, they all talk out of their ass. They're all Keynesian economists that have never studied any other ideas in economics in their life, and they're parrots, and they live in a bubble, and they just repeat the same narrative over and over. And the key thing is they all missed the rally. That's the key thing. So inflation right now is 2%. They should be cutting, right? They should be cutting because the economy's slowing down. We know the jobs numbers are bullshit. The reason that lady got fired is A, because she was incompetent. B, she was probably, this is my opinion, a political hack. She had the most job revisions on the last 2 months before Trump fired her that we've had in 57 years. And yet you see the plebes defending her on X. Oh, this is political. How can we trust the new numbers if Trump put somebody else in there? How is he qualified? How was she qualified? She revised over 1 million jobs under Biden, and she just revised the second largest job, or the largest job revision in 2 months just under Trump in 57 years. It's her responsibility to change the formulas, to change the surveys, to get accurate data. She's incompetent. Put a new leader in. Boom, done. Now, that was a hell of a rant. By the way, welcome to market makers. Let's look and see what we got going on in the marketplace. Guys, just look at this Shiller PE. I want to look at some leading indicators. You're at 39 right now. Now, there's a couple of narratives going on in our Discord. Narrative one, which is still my narrative, is that we're going to go up to a level and then we're going to pull back and then get the blow off, right? You guys know that I've been saying that for months. The other narrative, there's some people that hold this view. I don't know how common it is, but there's definitely people that hold this view, is that we're not going to really pull back. I guess Tom Lee's kind of in this camp now. We're not going to really pull back. We're just going to keep grinding up higher to these higher level targets. However, Occam's razor, guys, what I think is happening in the markets is the rotation of the same pile of money. There's not new money coming in, and we're going to show you that in the charts, okay? The simplest explanation is there's X amount of dollars. You're not getting massive inflows in because they're all waiting. They don't want to buy the all-time high. They want to buy the pullback, which is why Goldman, JP Morgan, they're issuing these reports saying you absolutely must attack any type of retracement in the marketplace because that's where they want to get in, right? 39 on the Shiller PE, second most expensive market in U.S. history. You will take out 44 from the .com, okay? You will take that out. But I think you're going to come up to a level and you're going to find resistance. I could be wrong. Maybe a big wall of money comes in. But the thing that you guys have to realize in this market is this is all euphoria. The guys that just do charts never know what's happening in the macro space. They don't understand the news events that drive the market. Look at what just happened with Powell. Powell came out, market perceived it dovish, that they may start cutting. Boom, epic rally. But what rallied? What rallied was the things that lagged, like the RSP, the equal weight, which did not make a new all-time high since November 2024. The Russell put on an outsized rally because it did not make a new all-time high since November 2024. Everything else pushed up. NASDAQ, not so much. And the last big key event, the event that matters. Nobody wants to tell you this because they want to talk to you about patterns, their cycles, their $10,000 education course. The only event that matters is NVDA earnings on Wednesday. NVDA is 3% of the world's GDP. 3%, the largest company in the world. Guess what happens? I'm going to go out on a limb. Guess what happens if NVIDIA blows out all expectations? The markets are going up. Guess what happens if NVIDIA disappoints? It will pull everything down because it'll pull the tech sector down with it. This rally is 10 companies, guys. So yes, you can have the equal weight, do some outperformance. The Dow, which was, again, just needed to take out that all-time high, the Russell, but you need the market cap leaders that led to continue to lead to get the blow off top. That's my thesis. You look at fear and greed, you are at a 61. Now let's finally talk about some charts. It's like a throwback where I'm ranting. I'm going to show you something that other people on YouTube aren't going to show you because they don't track these markets and they feel like it's a waste of time. They want to show you SPY, they want to show you triple Qs. I trade all the markets, have for a long time. We have a lot of European members, a lot of European viewers. This is the German DAX. We are at a key resistance level of 24,628 DAX futures. Something I've been talking about for months and months and months on this climb up. This is your 200% mark of your ABC. What does that mean? Simply put, from the COVID low, to your high there in November 2021, which, by the way, made its high with the NASDAQ and Bitcoin. This is a doubling of the range, simplified by that trend line. You see that? The DAX is at 24,628 key resistance. It's at 24,330. Could it break above it? Sure, but it is a key resistance point for some type of retracement before blowing off to higher levels if it does not break above it. World markets, what about the FTSE? The FTSE's on a tear. It's approaching its key resistance point of 9,445, and you're at 9,352. Close right now for holiday. Let's see if it comes up, finds its resistance, and if it cannot break through, it's going to start retracing. You'll see world markets lead. You'll see world markets lag. Aussie market came right up to target 9,020, started retracing 89.26. These are just some leading indicators of what I'm looking at. Are world markets finding resistance as well as U.S. markets? What about Dow futures? Dow futures came right up to 45,822, got a little bit of a turn down. Again, the Dow was due. The Dow hasn't rallied nearly as much off of its April 7th low. The NASDAQ, the S&P, they're all up massively. Dow finally broke out with the Russell. We did have the black moon on Saturday, and that could have marked your high. So let's look and see what we got. This is all that matters, guys. This is, again, you can turn the video off, go watch cat videos, go make a Slurpee and float around in the pool, because NVIDIA is going to move the markets the same way Powell moved the markets. I'm telling you, if NVIDIA crushes it, it's going to break out to the upside. Where will it break out to? You're at 181. Your all-time high is 184. It can go to 200 or 194, 220. Right in that range is where it could break out to. If it disappoints, it will make a double top. It will pull down the tech sector, chip sector. You'll start seeing the NASDAQ fall. You'll see the S&P bleed out in kind, and you'll see world markets fall with them. Okay, so NVIDIA's key support. You want to hold that 171 neckline. You're at 181. And you need to see if you break out to the upside, tackle 200, come to 220. If new money enters the market, guys, then you can have that rally. However, I think this is just money rotation in the market. You have the same pile of money. It went from the overvalued, super overvalued stuff to the stuff that hadn't broken out yet, like the RSP, the small caps, and of course, just some individual stocks. We look at ES here. Where are we at, guys? The same place I told you we would be back in January of 2025. We're between 64.36, 65.22. We're at 64.80. The predicted summer rally still in the kill box. We're up 35% off of the low in April. 35%. So my market top targets, as you guys know, Archie's was 71.22. That's Archimedes, my AI, and then 74.42, right? This is based on Fibonacci expansion. So again, one narrative Tom Lee has, other people have, is that it's just going to do this, keep grinding up, hit these targets. Maybe you get there late September, early October, then you make your top, then you roll down. I still think, unless you get more money in the market, which is why you keep stalling out, which is why you keep overreacting to euphoric events like Fed Chair Powell, potentially with NVIDIA on Wednesday. Unless you get that, you need that Wall Street big dumb money to enter the market, come back in, and drive you up to those higher prices. Again, that's just my thought process. You don't have to agree. The VIX is still crushed. This is VIX futures down at 17. You can see down in some key lows here going all the way back to December 2024. We look at the S&P futures here. Again, we had the black moon on Saturday. We have the S&P floating here. Why is it floating? It's waiting on NVIDIA. The same way I told you when it was floating, waiting on Powell. This is a euphoric driven market. The market is all psychology. You look at the ES on the 8-hour time frame. Where do we retrace to? This little run back down, 50% retracement, rallied back up, all-time high, 65.08. What's that key resistance level just above you? It's right there, 65.29. What happens if NVIDIA crushes it? The market responds and rallies. Then you want to look at 6,600, 66.63. So 6,600 should be your next key level if you were to continue the breakout. NVIDIA sells off, causing tech to sell off. Guess what's going to happen? That's going to happen. You take out these lows like 63.74, then you got to watch that 62.39, and then you start the larger retracement. It's really that binary. I'm just telling you that's how it is. I know it upsets some people, but that's how it is. You look at the spider. Again, same predicted range that we would be in. It's our second time in the range. 642 up to 654. You're at 644.97 right now. So watch 654. If this thing wants to go nuts and NVIDIA spikes up and everything starts running up, let's just look at some levels here. We have some levels at 652, which is still in your range, and then 661 above that if this was to continue to move up. We don't know. I don't know what NVIDIA's numbers are going to be. Nobody does, supposedly. Probably some people in Congress do, but I don't know what they're going to be. So we'll see how the market takes it, but that is the major event. You look at the triple Q, same thing. Got to the reversal zone 580, 588. Sold back off. You're at 572, and that's what you need. You need NVIDIA to be a rock star again and pull you up and come to the upside. If you take out 580, you got 588, 597. But again, I just think this is the same money rotating back and forth, which is why you see selling pressure in tech, rallying pressure in the small caps. We look at NQ. This is NASDAQ futures. Your key resistance is 23,913. Hit that thing beautifully. Sold back off to the summer rally entrance zone of 23,050. Again, you want to watch those higher level targets. If you can flip 23,913, 25,941 would be next, and that would be that thesis of continuing to grind up into the fall. Guys, it's possible. I'm not telling you it won't happen. I'm just telling you what I think's going to happen. If we look at NQ on the 8-hour, 24,068 is the actual fractal level to flip. The level to hold is 22,779 because NVIDIA is going to cause the NQ, NASDAQ futures, to do one of two things. It's going to cause it to do this, or it's going to cause it to do this. And if you start breaking these lows, then you're starting your retracement, okay? Those long-awaited retracements. We look at the Russell. This is what I'm talking about. Here's your small caps. You broke above that key resistance, 2336. You're at 2357. You want the joy, the fun to continue and take out your high here of 2477. Again, you need the markets to remain bullish. If they start selling off, people are going to be taking profits, selling what they made money in as they lose money in other assets, and you too will see the Russell retrace. If we look at the retracement possibilities from the April 7th low, thereabouts, let's go ahead and look at this. 382, 50%, those two levels. 2120, 2042. See what NVIDIA does. Do we take out the high, keep running, flip it for support, or do we start falling back down? One other thing to look at, let me just show you on the S&P because I skipped right over it. I've had so many S&P charts. 8-hour time frame. Let's just look at the indicators really quickly here as well. If we look at the 8-hour time frame, you got some good volume follow through. You're not getting the money flow. Momentum's trying to turn bullish, but overall you have bearish divergence. Let's look at this on the daily, which I like to look at. You look at this on the daily, we look at our DVD, and here you can see it, right? The encapsulation of a daily volume candle. That rally up of 100 points didn't even take out this midpoint yet. You need to get this. Remember, what is volume? It's people buying and selling. This is the delta of the two. It shows you who won the candle. You need to take out this midpoint to give some, what's it called? To tell you that this rally is true. You have buyers stepping in, propelling it higher. You got bearish divergence on the money flow. The money flow in the daily didn't respond to the nice 100-point rally you got, 140-point rally that you got on the S&P. What's momentum doing? Let's look at momentum. Momentum still bearish. It genuflected back to the upside, came back down. It needs to cross the signal line on my SMO. So again, it's not a fake rally. You got to separate the two things. I hear people say it's bullshit, it's a fake rally. You have fewer people paying higher prices. You have the same pile of money rotating between things, buying up what they think is a good deal. You don't have a wall of cash coming in, which is why you have money markets at an all-time high. So we clicked through all these. What else we got here? We did Russell. Tesla broke out of our triangle pattern, and there you go. You're trying to take out that fractal right around 348 to get more upside. Again, you failed. You're trying to break back out again. Got to flip 357, 367. You got 426 above you. And guess what's going to happen? If NVIDIA shits the bed and tech starts selling off just by default, doesn't have to, but you'll sell off with markets, okay? So the support levels I'm still watching on Tesla, 274, 251. Doesn't have to go there. NVIDIA was a rock star. This thing's going to the upside. We have our coil. The coil's been tightening. But as of right here, until you break out, you have a failed breakout. We look at Apple, same thing. Look at the tech, guys. This led the rally. Look at Apple. Very weak bounce. 234 key resistance above you. Got to take that out for more upside, which you will see, right? NVIDIA does well. You can see the tech sector push up. Individual idiosyncratic stories may be different, but in general, watch 225 for support, 234 for resistance. We look at Meta. Meta sold off, came back down. Was thinking about filling that gap. Same thing. Watch Meta. 763, 782 above you, 804 above you. If this thing starts selling off more, those Meta retracements, 382s at 675, 638. If NVIDIA starts to tech sell-off, which will spread to the other markets as well. Microsoft hit our target beautifully, right at 551. Holding support here at 504. Levels beneath you, 474, 450. Doesn't have to do that. Remember, these numbers, you could have a delayed reaction with NVIDIA. You could see a rally up, then a failure, right? So that's when you start trading with Fibonacci, which you can learn all that stuff on the Discord in my YouTube videos as well. We look at Hood. Hood did the same thing, guys. Beta stock, 300% rally. Got all the way up to 117, and we got above the 200% at 106. Different patterns measure this different ways, but you can see what you're doing. You're failing, right? You're consolidating. Consolidations can resolve up or resolve down. That direction will come from the one stock that I'm a broken record and keep repeating about. But watch these levels. You want Hood to stay above 106. 127 would be a target. Starts falling apart. Watch 89 bucks. Watch 84 bucks on Hood as well. Let's look at CAT. This is a cyclical. It's an industrials. You have a scissor pattern, beautiful open scissor. And when you look at this, again, look at your touches. What is the key pattern you notice here that you built? Built a nice double top. 433 is the price. We'll see if this holds. Cyclical, you can look at this because, again, this is heavy industry. Caterpillar, all the big machines that they make. Watch that zone. We had a member trading CAT. He was doing an awesome job with it. Great open scissor pattern. So we'll see if this resistance holds as well. Looking at these indicators in the market, Palantir, big meme stock, trading at 100 times sales. Got up to our 184 target. Already sold off, guys. Down to 142, right? Weak little bounce back up. This led on the way up. Look at your leaders on the way up. To think, so again, for me, it's to think that we're going to be able to get to maybe my targets are too high, but I have 7,000, 7,500. But I just don't see us grinding to those without these beta plays, heavy retail trading stocks coming into effect. I don't think you'll get enough people excited to rotate into value stocks and underperformers to lift the whole market. But I could always be wrong. Long video today. Hope you enjoyed it. Leave me a comment. Follow me on X at Market Canary. Hope to see you guys in the YouTube members only or on the Discord. Check out the crypto video. It'll be shorter, I promise. Out next.